So I got a comment recently about scaling up my trading. And this came after I posted the trade recap or the trade review for the month of October. And I figured this would actually be a really good time to talk more in detail about why I'm not scaling up my trading and why I'm in no rush to do so. Now, it's actually a really good comment and a really good question to ask. And I think it should be asked a lot more in a lot of different people, because there's a lot of people out there who will be very profitable traders, right? If you will. Yet you see them doing these small account challenges and they're like, hey, I'm going to take, $100 to $1 million. I'm going to take 100 to 10,000 or whatever the numbers are. And the reason why I think that that's interesting or you should be skeptical is because, again, if you're a consistently profitable trader and you made your way, from a small account to a larger account, trading your own capital, etc., like that's a tough process. Like that takes a long time. And when you reach that point, it's kind of the question like, why would you ever go back to things as they were before? You've done all the work to get there. So why would you go back? If you can make 1%, let's just say in a day, why would you make 1% on a $100 account when you can make it on a $100,000 account or more, right? So it kind of gets the mind spinning a little bit when you see people promoting all these small account challenges and showing you the crazy percentage gains because, of what they've done. And the reality is that they probably took 17 tries to get that one, and then they're going to promote that one to sell you something and whatever. But at the end of the day, we're talking about scaling up. And the older I get, the more I view things in life kind of like college basketball. And that might sound super weird. I'm not an NBA guy. I'm much more of a college basketball guy. And I think it relates more to college basketball than the NBA anyway. But it's really just a game of runs. And what I mean by that is kind of like you can almost relate to the stock market. There's bull runs, there's bear, markets, there's bear runs, and of course bull runs have generally speaking, overtaken us to the upside over the years, which is awesome. And I think that's a lot of that is kind of like life. You build momentum, you build experiences, you build these things over time. And you get better. Like you're not going to make the same mistake that you made day one where you didn't know buy or sell. You know what I mean? Like you're not going to make that mistake where you click the wrong button, in 10 years or in 2 years, even. And so all of these little things kind of push you in the right direction over time. But inside of that general curve, if you will, you're going to have the ups and downs. And that's kind of the game of runs. So why is that relevant? It's because I don't want to get overly emotional about a run, because I know that no matter what happens at some point, I don't know how long this run's going to be, whether it's good or bad, up or down, but at some point there will be a counter run. And it's more about being able to manage those counters much better, because it's very easy to give back a lot of the gains, if not all the gains and more, from a bull run or from, going on a good run, let's just say, in my own trading in, a bad time. And this is not necessarily about like the stock market necessarily, because I have found that over the past couple months, you can't necessarily correlate the stock market to my performance as clean as you may think. It's more about price action in general versus the directional move of the stock market. So coming off that, let's say I had a good month, hence the month of October. I don't want to get overly emotional, and the logical thing to do is, okay, we had a good October, that proves I'm doing better, let's scale up for November. Like that kind of makes sense. But going through these runs and being through these runs, I feel as if, not that I'm trying to be much more defensive, but I know, hey, this run is not going to last forever. This run could last November, December, who knows? But if it ends right now and I start to size up, within, 2 weeks, I could give back potentially a large chunk of those gains. So let's not do that. And guess what happened in November? November, almost exactly to a T, the first 2 weeks were almost the exact opposite of how things were in October for my trading strategy, for me, not for everybody, for me. And so things that were working in October were not working as nicely in November. And had I scaled up substantially, I would have given back all of those profits. And in my case, I did not. And now as I've bounced back a little bit and I've found a rhythm as we now are into the back half of November, I've actually made all those losses back and some more. So it's this game of runs and being able to weather that storm. I personally think that's a big component, and sizing up too quick is going to throw that off and can get you over emotional up and down. Now, the next piece is that I've only really been trading this strategy for about 9 months, give or take. I've had strategies, and this was kind of one of them, but I never solely focused on one thing for a very long period of time like I have with my current strategy. And so, yes, I feel pretty good about it right now, but I also look back to myself and say, hey, it has only been 9 months. I haven't gotten a year's worth of data logged out of this strategy. As I do track everything, shameless plug with TradeZella, link below. But I do track everything with TradeZella. So everything is tracked and logged. I'm journaling everything. So I'm seeing, what's working, what's not. Now, as I focus in and continue to trade this strategy over the next 3 months, 3 years, right? Hopefully, I'm going to have that much more data and I'm going to have that much more confidence. And so the confidence is only going to slowly build in the strategy and in how I operate the strategy and when to push pace and when to back off, right? Because I'm going to have that data. So I don't know. I technically haven't traded this strategy specifically during these months of the year, and specifically coming off of the moves we've seen, I haven't had a ton of experience with the strategy. So now that I've got these more experiences, seeing the move down to lows, seeing these consolidation phases, seeing these big moves up, I have a better sense of when things work better, when things don't work. And so when I could kind of relax, look for higher quality setups, when I can push and say, hey, these are all good setups. These things are all aligning. Boom, boom, boom. Once we have all these boxes checked, that means we could size up. But again, I only will get there. I will only know that, right, with more experience and more time under the belt. That's kind of my logical explanation to why I'm not in a rush to size up. But how will I do so, and how have I done so? So if you've been following the trade recaps or in general the channel lately, you will know that I recently switched from trading my own money options to a prop firm and trading essentially just shares. So there's no time expirations, none of that stuff. Just playing the charts, playing the shares. And in doing so, I have felt much more comfortable in my sizing, but I've pretty much kept things pretty close. So my max loss days are roughly the same. They're up a little bit more because my bigger winner days could be higher. But the general rule of thumb and the general take profits and the risk reward has been around the same. I don't like to, on day trades, to risk more than $100 per trade. And I like to, on swing trades, keep that to under $200 if it's a bigger picture move. And so those are kind of the levels of risk that I've been tolerating as of late and that I'm comfortable with right now. That'll inch up to maybe 150 per day to maybe 300 on swing trades, etc. And again, that all means that my take profits are larger as well. I'm not, generally speaking, I'm looking for a 1-to-1 risk reward ratio. I'm getting better than that most of the time. And then I move stops as time goes on and trades develop. So we're getting better from that perspective. But I like to frame it with risk first, because again, you got to be comfortable with what you're risking before we can even talk about the gain. So just know that if I ever say, hey, I'm risking $100 here, I am not taking less than $100 unless I have a partial profit that hits and then the rest of it stops me out. Like that has happened and could happen. That's kind of the way I go about it. So it's going to be a very slow progression over time. And that's what I think is most comfortable for me. But again, there is no rush. The market's going to be here tomorrow. I mean, at least we think, and I'm going to operate as if it is. It'll be here next week. I think someone told me, I'm not sure, maybe you can confirm in the comments, that it will be open next month and next year. But that's pretty big news. Next year, that's really big news, but someone did say it would be. So again, like when you're trading, investing is a different game. When you are trading, I mean, the compound effect can be incredible. So there's no rush. Take your time. Once you have a solid, consistent risk management approach, a solid strategy, a way to identify setups, a way to take profits, how do you stop out? Once you got that all in your belt, you can kind of start to inch your way up with the sizing, but there's no rush because the amount of change you can really make in 1 year is nuts. I mean, you can go from being unprofitable to all of a sudden at the end of the year, having consistent weeks, stringing together, boom, boom, boom. And next thing you know, the year after that is your progression year. And that's the year that you scale up from maybe the sizing that I'm using to maybe double or maybe 10x that size by the end of the year. And you're talking a completely different ballgame, right? But that, again, that could happen in a year. And in the grand scheme, a year, I'm 25, a year isn't that long. I'm not really too worried about it. So that's my long answer as to why I'm not interested in scaling up my trading super, super quickly. I will pretty much probably keep my sizing consistent into end of year and then, assess and change and ultimately maybe modify things from there. But there you guys have it. I'll leave any links, resources down below this video. There's probably some good stuff. I'm not sure if any Black Friday deals are still going on, but if they are, if you're watching this video around that time, maybe they are. Check them out, and I'll see you guys in the next one. Peace.